In this video, I will show you a strategy that I tested very heavily in MT4. I coded the strategy, I completely automated it, and I tested it with 99.9% tick data, as you can see it here. So the highest quality tick data that is possible to get. And I tested it with variable spread and slippage. So it won't be a strategy that is just only good in backtest and not in real life. That is really important if you want to be a trader. So now let's see some example trades in TradingView. In today's video, I will talk about a really simple strategy that you can try out in your own trading, and you can actually learn it very quickly. I will tell you all the details. It is a complete strategy with dynamic exit rules and filters, and of course a great entry rule as well. We will need 8 exponential moving averages and 4 simple moving averages. Now let's just jump into the strategy, and I will explain the core idea behind the whole system along the way as I show you the numbers and the actual things that will be needed to trade with this strategy. So first, we will need 2 exponential moving averages. The first is a 58 one, and the second is a 107 one. So the first condition is that when the I will put some different color on the bigger one so we can distinguish it more. Okay, so when the smaller moving average crosses above the bigger moving average, so the 58 moving average crosses above the 107 exponential moving average, then our first condition met the requirements and we can consider it as a good condition to enter the trade. Now of course we have a second condition as well, because one condition is most of the time not enough, of course, and this is a thing that I want to tell you because this is a complete strategy and I want you to understand it fully and in detail. So the reason is that in my videos I show real trades, and not just trades that were tested for a few months or just in TradingView manually, but trades that were tested by an algorithm that I coded, is because that I want to show you real trades, and you will see it that I don't show the best the best that I could draw up to the chart, but I show you the truth. And in my opinion, most forex YouTubers and strategy YouTubers strategy testings are just way too optimistic and not real. They are just for the views, and I don't want to do that. So let's get into it. This is our first condition. The crossover happened here and it is just great for us. So let's see the second condition. The second condition is that we will need a 14 period exponential moving average, and we will need a 187 period exponential moving average. And the rule is that when we take the trade, the smaller, so the blue line, the smaller exponential moving average, has to be above the bigger, so the red line, the bigger exponential moving average. And as you see, we are at a great place because both of the conditions, the first and the second, is great to take a trade. So we did that, and the algorithm did it for me, and now I show it to you. So we took this trade, and as you see, the market was in a good kind of a short-term uptrend, and we just it was a great ride, and we have a great exit strategy that was working really well, because now after that it is just some ranging markets, and that is not what we want to trade. It is not nothing that we want to just stay into the market for a long time when there's a ranging market. So automated exit strategy that I tested with the algorithm gave the signal here, and I will tell you now what is the actual exit strategy so you can trade it on your own. So the exit strategy is really simple. We will need simple moving averages actually to trade with that. We have the two simple moving averages, and now I will tell you how to establish the exit rules, because as you already know, if you are watching my channel for a while or you watched any other videos of mine, I have a couple of filters, not too much, but a couple of filters that I established through coding more than 1000 strategy, indicator, and Forex robot, EA, C-Trader robot, and every kind of trading robot for clients and for myself. And so these are rules that are really simple, but they always add to a strategy. Now let's just see the crossover condition. So we have basically one rule, and that is that when the 74 simple moving average crosses above the 137 simple moving average, we are out of the trade. We can close the trade. And as you see it here, it happened exactly here. So somewhere there we closed the trade. And there are some other rules that I want to tell you, because they are, in my opinion, really important. And so the filter that I've talked about is an X minutes after entry parameter, and I see it that most traders didn't hear about this at all, and they don't understand for the first time how it works, what it does, and they write to me on Telegram and ask me about this. So now I explain it. So it means that, for example, you take a trade here. I want to add that we carry one trade at once per pair. So if you have 5 pairs, the maximum number of trades at once on your account is 5. Because we don't want to just open trades unnecessarily over and over again, because even if you have a good strategy, you will lose because of that. So this is a safety function, and it is really working. Now the X minutes parameter means that we took the trade here, and we have to wait. In this case, with this strategy, we have to wait 500 minutes after we can go and start to look for the dynamic exit, the crossover. So what does it mean? It means that if the 500 minutes were not if it hasn't passed when we are at this place, we couldn't close the trade with the dynamic exit, because we would have to wait for until the 500 minutes parameter passed. And it is really, really important, because if you close it before that, you will cause yourself a lot of trouble, and you will get into just too much noise, and it is not beneficial for your trading. And this is why an easy strategy where the entry rule is not that complex at all can work and actually be profitable, because of these kind of filters. Because of course, with a crossover strategy, you can enter the market like 1 million times and blow your account. But this way, that you have to wait a certain amount of minutes that were optimized by an algorithm, so it is a perfect number of minutes, kind of. This way, you actually know that it can work if you have a little bit of patience and discipline. So of course, it is great because we can close the trade here because the 500 minutes passed, and I recommend to use a safety stop loss as well to this strategy, and that is 60 pips. 60 pips will be enough to a safety stop loss, and with that we will have a great risk to reward ratio, and overall we will have a great exit strategy three-way combination. Now that you know everything about the buy, entry and exit rules, let's see the sell, entry and exit rules. I chose this trade. They were more beautiful trades in the sell department when I tested the algorithm, but I wanted to choose this trade because I want to explain some ideas and some psychology about trading that will be really beneficial for you, in my opinion. And I want to build a community of traders who truly understands the markets. So this trade is a sell trade, and it actually made quite a good number of pips. But as you can see here, there would have been places where it would have been better to close the trade, of course. But I want to tell you some things along the way why it was just not a good idea, and why it is not such a bad place at all to close the trade, and how important it is to actually follow a system that works, a system that you backtested, or you know, I backtested this system, and you know the losing streaks, the winning streaks, and the actual numbers, the statistics. And this is, if you remember at the beginning of the video, I said that I see many YouTube Forex traders, strategy masters, that they are overly optimistic about those kind of things, and I always see that I have to tell you a secret what they are doing. Let's say this is an entry rule, okay, and they will adjust the strategy in a way. So, you know, I drew this trade up because this is what the algorithm gave me. It's completely okay. But they do the following. They will look at a trade, an entry. They will put the entry here anyway, but yeah. And they will modify their strategy to the trades that they will show you. And the problem is with that if you are testing with a true algorithm, of course they are not coders, so they don't know how to do that most of the time, but if you test with a real algorithm, you can do that. So I can't do that. Of course I could do videos where I just show these random trades, you know, that it is the trade, and I establish a strategy around that, but that is not how life works. That is not how statistics works. You know what works that way? Denial, and denial of reality. And the problem is that you can't be a successful trader if you can't accept the harsh reality of trading and life, and it is not easy. And if you can make good pips, it doesn't matter where you close your trade. Do you think that like the biggest investors and hedge fund managers think about that, how the chart looks like? No, not at all. It only the amount of pips and risk to reward ratio and largest amount of winning slash and losing trade ratios, profit ratios, and all kinds of statistical numbers matter, and not how the chart looks like. And this is why, in my opinion, and I just was thinking about that, if in my opinion a beginner trader who is blind would perform better in trading than who is just constantly looking at the charts. And it is because the charts and all the fancy indicators just destroy your emotion or barrier, because it is like a gambling machine. They make it so it looks shiny, and it has sounds and noises, and you are excited. And this is kind of like that. But okay, enough for the talk. Let's jump into the numbers. So let's see the numbers. So we will need two exponential moving averages. The first exponential moving average is a 46 one, and the second exponential moving average is a 177 one. And we can enter the trade when this crossover happens, that right here. Oh yeah, I want it to be red. Yeah, so here we took the trade, and actually it was quite a ride, I have to tell you, and it was ups and downs, but mostly downs, and that was a good reason to to test this strategy, because I always realize how trading works if you have discipline. It really works. And the test here that I would give to a new trader is that if he or she could hold this trade when it goes back up and not just closing it right here, because it is discipline and you have to learn it, that you have to wait until your strategy tells you that you should close or you can close that trade. Now, the second thing is we have the first condition that is great, and we have to take this trade based on that, but we have a second condition, of course, as well. The second condition is the following. We have a 38 period exponential moving average, and we have a 77 period exponential moving average. Perfect, because the rule is that the 38 exponential moving average has to be below the bigger one, the 77. And it is great, both of the conditions are at the right place, so we could take this trade. And now I tell you how you can exit the sell trades, because actually this strategy, as I showed you in the beginning of the video, turned out to be really good, and it has great statistics. So let's see. We will need a 38 period simple moving average, and we will need a 167 period simple moving average. Now I want to show it to you so you really can see it. So I will just do a little bit of modification, and I want to be this to rerun. Okay, now as you see here, I guess you already guessed what is the strategy here with the numbers. So it is that when the smaller simple moving average crosses below the bigger moving average, we can close the trade, and it happened exactly here, and we closed the trade, and it was a really good trade in terms of number of pips, and it add to the risk to reward ratios. And I chose this trade because it looks ugly, in my opinion. It is not that beautiful at all. It's not some smooth trade, because it has ups and downs over again, but it turned out to be a good trade after all, and that's what matters. So this is, of course, the first rule. The second rule is, of course, you already know that it is the 500 minutes after the entry parameter, but of course it was passed a long time ago here when we closed the trade, so here we don't have to care about that. So a safety stop loss with the sell trades is, in my opinion, should be a little bit higher than with the buy trades, like 70 pips somewhere, 70-80 pips, because the algorithm told this number. And and with the statistics I understood why, because of course it is an asymmetrical strategy too, and most traders don't know about that. Buy and sell trades has really different kind of personalities, as I have, I can say. So I recommend for you to listen to the market, the heartbeat of the market, kind of, and just learn, for example, why buy and sell trades have to be different. Because if you trade with symmetrical strategies, most of the time big banks, hedge funds will just so easily hunt you down, and that is not a great thing if you want to be profitable. And now I show you the real statistics. Now let's see the test that was taken by the algorithm, and so I will explain all the details about this, the statistics of the strategy. I will show you the trades, and just overall I will explain why I think it is a good strategy to trade with. So I already showed you the chart at the beginning of the video, and some trades as well, because as you can see, the dynamic exit closes the trades, in my opinion, in a really intelligent way, and it let the winners run and closes the losing trades early. And that is what we are looking for in a trading strategy. That is what professionals are looking for. Let's see the statistics. The statistics are just, they speaks for themselves, because as you can see it here, we have almost 1 to 2 risk to reward ratio. We have an insanely largest profit trade than losing trade, and that is always a good sign, because that means that the dynamic exit works as it should work, so why we are using it in the first place. And we have a very good profit trades of total, and combined with the 1 to 2 risk to reward ratio, it is much better than a 99% win rate strategy with a much worse risk to reward ratio. So it is statistically better if you calculate it. Of course, our average consecutive wins are better than losses, and the drawdown is nothing too serious, around 9%, 10%. That is really good. And overall, in my opinion, it is a good strategy to try out. One more thing that I want to tell you is that, as you can see, not many trades were taken by the algorithm. It is 1 year. But listen, if you have a precise strategy that will make good profits, first of all, you don't need that many trades. But second of all, you can trade with it on multiple currency pairs. And if you trade with it on the top 10 currency pairs or more, you have many trades, but you still have a great precise strategy. So it is much better than doing, like, you know, hundreds of trades on one currency pair, and the strategy is not that precise, or it is a scalping strategy that will blow your account at the end of the day because it has really bad risk to reward ratio. So keep this in mind too. Ciao.